Pac West.
Oh, boy.
Because Pac West was down over 30% overnight. And the reason is simple. They lost 10% of their deposits last week. And last week, Pete, was a pretty calm week, relatively speaking. But obviously, some people knew that was coming because you remember a couple days last week, Pete, when it was down 80% for the day? I do. And you're the one that was pounding the table for it with our unusual option activity. And boy, did we have it, folks. We had unusual option activity in Pac West. They were buying the 6 puts. This is a 1, folks. If you lay it sideways, that's 6. 6 puts. They were trading those and they bought them in big numbers. And those puts went from 45 cents all the way up to $1.90 so far today, Pete. And they could go higher. They can go higher. But it's
absolutely
wise to take profits, right, Pete?
Yes, you got to take some off. I did, as a matter of fact, because I did jump on that trade. John, we talk about it all the time. We talk about it within our inner circle and with the guys over at Market Rebellion and anywhere else that you and I have been of late. And we've said, hey, look, there is no such thing as a one-day event. There's no such thing as just one stock event, one company. It's going to be more. It's just like when you find a rat, you know there's more, right? Well, we found that rat, and then we found another, and then we found another. Then we found these jackasses because, John, they lost, as you said, 10% of the depositors in a week. I mean, what does that say? I think it says to me that there's a heck of a lot of nervousness going on out there. People are starting to smell out where they should be going, and there are certain names that have come up more and more and more. And by the way, it doesn't end with Pac West. There's a lot more names, but you'd have to be a subscriber to Market Rebellion to see all that. But we've got a lot more puts that are being bought in different regional banks, John, and in some of the super regional banks as well. And so I think that there's still something to be done here in terms of, I don't think it's done. I think that there are more names out there that are going to have some issues. And I'm not trying to be like a hater or a big bear or anything. It's just a matter of fact, because look at where these loans have gone and where are the buildings now? Are they at 100% occupancy? Are they at 50% occupancy? Who's been loaning the money out for some of these various things? I still think we've got a little ways to go, John. I don't think we're done.
And I think, Pete, the reason that 3.35% for the 10-year is where it is the bond market just saying, hey, not only is the Fed going to pause, they're going to start cutting. Now, I have said repeatedly, Pete, I don't think they cut until September. And obviously, that's just my reading of the bonds. It doesn't mean it's written in stone and it has to be then, and things could change between now and then. But I think it's pretty notable that there are so many haters, so many people buying puts on these banks that, wow, it's not just 1 or 2 banks, folks. It's a lot. And we'll get a chance to cover more of that later. But like Pete said, if you were a subscriber to our services.
Want more from Market Rebellion? Don't forget to like and subscribe and learn more about options trading at marketrebellion.com.